Okay, so before we move any further with the webinar, I will just like to go ahead with the legal disclaimer over here right on the screen. The legal disclaimer here is suggesting that all content presented here will be for educational purposes. I am not soliciting any buy or sell. If you do go on to use any of the views presented here in your trading or investing, you yourself will be liable for your profit, loss, or loss of profit. Further, whatever here is you can read. And now I think we should start off with the actual webinar. Let me quickly go ahead and give you a quick introduction here before we move ahead. And my name is Nirav, and I am the admin of this website 50eyes.com. And I'm a full-time trader as well as educator. I do publish video course and do run personal classes. And this particular webinar is from the series of the Applied Elliott Wave webinars, which is a monthly webinar. And this will be the 23rd in the series of these monthly webinars, and also would be the last webinar for the year 2020. The way we proceed with these webinars is, first of all, I will go ahead with the chart on the screen, and then once I am completely done with my explanation, I will ask you guys if you have any queries. If you have any queries, then kindly wait till I ask, and then you can post them in the comment section. That way my flow of thoughts is not disturbed. And make sure to keep the questions in accordance with what we are discussing, like only the technical stuff and accordance with the charts we have on screen. So we generally go ahead with crude oil, gold, S&P 500, Nifty 50, and if we get some time at the end, then we will go over some stocks. So that's the way we'll proceed. And before we proceed with this webinar's contents, I have a very exciting stuff to show you guys here. So although 2020 is not completed so far, but we have the track record till November's webinar, and 55 total scripts were discussed or views were posted which were clear, out of which 6 did not played out as expected and 49 played out as expected. That brings our accuracy to 89% so far. Keep in mind the December one is still to be published, so 89. uh, so I think this is just exceptional. This one is tracked by my one of the previous batch students, Nick. He is also in the webinar. So thank you, Nick, for putting out all the time and going through my webinars over and writing all these hypos which I've discussed and what played out and how it played out. So this just shows off the exceptional level of skills, and this is also something I use as marketing for my classes. And that brings me to my second announcement over here, that the training program LT, the next batch, those who are interested can make the inquiries from the link currently on display on screen, 50eyes.com/training program LT. It will be posted in the description section of the video as well. And I am running for the first time a 20% discount on these personal classes, which is something I've never done before. I never run a discount on my personal time. If you are interested, then that's a extremely good opportunity here for going on in live classes with me. And the third announcement is the video course, which is something you guys are already familiar with. I have this Elliott Wave video course. So again, for the first time, I'm running a discount on this one as well, and that's extremely big one, 50% discount. For that, the link is this 50eyes.com/PWD. I will again post that in the comments, sorry, what description section, and you can go ahead and avail it. Only planning to keep it till the end of this year or till the maximum number of enrollments I'm expecting are reached. Make sure if you are interested to check it out before the end of this year. So these are the main three announcements. And now that we are done with all that, we can now go ahead and start off with our discussions. Before we start off, just give me a final confirmation that you can see this chart of crude oil on screen, WTI crude oil. I think that's enough confirmation. Let's start off now. So before we move ahead with the discussion of the current price action, let's quickly have a look at what was discussed in the last webinar. Last webinar, as you can see, is posted here on 22nd of November 2020. So let's check what was discussed on 22nd of November. So I recall very clearly, but for record purposes, I'm showing it that in that webinar, my view was that this is a 3 over here and this is a 4 and there will be a leg up. And this 4 I was considering as a triangle and I was very confident of this analysis. So let's just check the exact chart and 22nd November, right? So price action was till 20th. So yeah, so this is the point of the last webinar. And from here on, as you can see, straight off upside movement. One second, let me change the color here. Yeah, so straight off upside movement from here. So this was like exceptionally well played out analysis. And now that this analysis has gone up and hit all the expected target levels, let's just see what the price action is doing now. So what I think is that we have completed a sort of impulse over here, 1, 2, 3, 4, 5. And those of you who are not much familiar with the Elliott wave, then I'd like to clarify that an impulse is a 5-wave progression. So in this 5-wave progression, we have the wave 1 up, 2 down, 3 up, 4 down, and 5th up. Once this 5-wave progression is complete, then we see a corrective structure to the downward side. So in this case, this 5th wave is complete over here. And this is the corrective structure in the downward direction, corrective structure in the downward direction, which should again follow one more up leg, which is again followed by one more up leg, as you can see over here. Now, because Elliott wave is fractal in nature, these progressions can continue going and going, because a 5-wave up could be just wave 1 of a higher degree and so on and so forth, which is precisely what we are expecting over here. And as per our main count H1, as you can see over here, it is the main count in CN color, which is this bluish color. So I'm expecting this to be 1, this to be 2, and this to be again a 1 of a lower degree and again a 2 of a lower degree. That would suggest that more upside is to be seen in this market, right? What we mean in simpler terms is that this is 1, this is 2, and this is the 3 continuing, right? And within this 3, if we just magnify this 3, then we will have dot 1, dot 2, dot 3, dot 4, and dot 5. So this is precisely what you can see over here. Within this 3, you have your dot 1 over here, dot 2 over here, and dot 3 is in the formation. So it's not really there right now, but it is something which is forming, is what we are expecting in this market. So that basically means if this count is correct, then we should see more upside. Now, how to play it so that there is a limited risk? So for conservative view, we can place an alert, as I have already done, above the last high of whatever this is, 49.14. And keep in mind, this chart I'm using is a CFD chart, so futures level will be a little bit different, but analysis obviously is the same. So you can keep an alert over there, and once the price action goes above it, then you can enter some longs. Once you have entered longs, then accordingly you can place your stops. Generally, if you consider that the wave 2 is complete, then you will place your stops a little below it. Secondary case could be that this wave 2 is a bit more complex than this and is continuing like this or something, where it gives a false break first and then down again and then it goes up for 3. So you should keep this view in mind. It can happen generally, because most of the time the major operators would like to throw out the retailers, and that's one of the tricks they use, because most retailers are just going on very thin capital and hence using a lot of leverage. And once the market goes up, they enter here, but their stops are very small because of the high leverages they are using. So yeah, this kind of turn can be expected, but the overall view positionally is upside. So when would we be wrong? We would be considering this view to be incorrect if we see a move below this level of 44 without any upside. In that case, we will have to consider the fact that this might be a corrective structure going up. I do not think that is the case. So, but just keep it in mind because we need to keep all the perspectives in mind rather than just going with just one view. That won't really be analysis. So, just to keep both perspectives in mind, this will be your technical invalidation level 43.65 something, and conservative longs above 49. I've circled as ending diagonal. That is an interesting view. Let's check if that makes this. So what Nick is asking is, I think this one, two, three, four, five. Possibly this is three, possibly this is four, and this is five. So that's definitely possible. But I just want to check if this is not the smallest wave. Hmm. Yep, that is possible. The view he is asking is that could this be one up, two down, one, two, three, four, five, or three? This could just be the four sideways, and then there could be a fifth. So yeah, that's possible. And the direction is still the same. Another thing, well, that brings up one more thing here now, does it not? What about three? What about four? What about five? Yeah, that's another thing now. So it does not seem to be going higher than this trend line. Yep. So this view again, now this view we will have to note down. This view points out that uh, the possibility of downward movement is there. So that means conservative longs, which I was saying, only above 49 is the way to go because this possibility is still viable. What we have changed over here is compared to the last count. What I have changed is that three is over here, four is over here, and we have considered that the wave 5 is already complete at this point in time. So if wave 5 is already complete here, then this count can already be relegated once we see a break of the last high, right? So unless we break above 49, there won't be any good chance or a good risk to reward for longs. And at the same time, the lower side, which I was saying, low below this, one second, yeah, below this level, or what was it? Let me check exactly. 43 in that sense is a little bit farther. Yeah, so low or downside, you can plan on playing, not play, but plan on playing below the level of 45.70. So this perspective, this just discuss perspective brings this thing in, bring this new idea in light, which is an important one. And one more thing I like to point out here is, although this 4 is a little bit shorter, so compared to the 4 of previous degree, so I am of the view that we should still keep this as an H2. But nevertheless, the other important thing I'm seeing over here is that the market is unable to break this trend line. So since this trend line is not being broken on the upside, as long as it's not broken on the upside, we will have to consider this H2 also as a viable option, which is suggesting that downside can be seen from here. So let me check. There are a lot of comments here. Nick, I think that was the view you were pointing out, wave 4 circle triangle, and wave 5 is continuing. Yeah, that if wave 5 is continuing, then yeah, that view is again still in alignment with our previous count. So that's why I did not really care to consider it that much. Is there any other question on crude oil, or we can go ahead and move to the chart of gold from here? Kindly post that in the comment section that everyone is clear. Let's move on to the chart of gold and let's larger wave content crude oil video, please. Sandeep, I have already covered it, I think, multiple times in last 2 3 webinars. So just check them, any of them. So for gold, let's first quickly check out what was discussed in the last webinar. And gold, I believe there was a clear view on gold in the last one. Yeah, let's see what that was. Somewhere over here we can see gold. And yeah, before we discuss gold, I'll just like to mention one thing that those of you who would be watching later on the recordings, do turn on the quality settings to 1080p PST, because I use this dark background which looks exceptionally bad on a lower setting. So yeah, I think the view in gold was that we were expecting one down leg, but let's just quickly see if something else was also discussed or whatever the whole discussion was. Yep. So definitely one more down leg was remaining. That's the overview on gold. And now that we know that, let's check what the current thing or the current price action is. 22nd, 28th November over here. Over here. So this is the last time when we discussed this market of gold. My view was this market will go lower, as we just checked in the recording of the last webinar. And as you can see, I mean, there is nothing to say here. It pretty much just went after, I mean, on the next session, just went down. And this is the daily chart, as you can see on the top left. So exceptionally clear analysis played out precisely as expected. And I was tracking it in live, like regular basis on shorter time frames, and there were very clear long trades that were there. But obviously, because these webinars are monthly, I could not have shared them with the public. But even this bottom was very clear, and then there were two long trades I recall, which were very clear and were tradable. So very clear market on gold so far. But let's leave history to history and see what the current price action is dictating. So I personally think that the simplest view which we have been following so far, if we just go with it, then this is WXY. Now, if we just continue going with this view, then we can even say that it could be a continuation to the downward side, right? Because this is WXYZ is called a triple zigzag. It's a corrective structure which is composed of three waves completely. And W is a three-wave pattern followed by a connecting wave X. Y is a three-wave pattern joined by a connecting wave X with another three-wave pattern. So that's triple zigzag for you. And the second view is that this Y is the completion of the whole correction, and this will be your double zigzag pattern complete. That would suggest more upside. So right now there is no clarity which of these counts is actually being followed by this market. The only thing technically I can say is that once this level of what is this 1950 is taken out, then we can say that this correction WXY is complete. And this was the short term low of 1761, and the market should see new highs from here. As long as this technical level of 195152, whatever that is not cleared on the upside, we cannot say with the pure conviction that this market is going higher and this was the low. So that's one point we need to keep in mind, the level of 1951, right? Second thing is we can have a look at it on the shorter time frame and see what this last price action is. 1 hour should be more than enough. So after this wave Y, we can say that this is over 1 or A, and this can be over 2 or B. And if that's the case, then this could be your dot 1 should be followed by dot 2 and dot 3. That will be your bullish count, right? And as I mentioned, technical level 1951, I think, was the level where you will have the clear technical view that it is going to go up. And the second view would be that this is not going to go up, but this was just the wave X. And this was in that case A, B, and C. It also means that if A, B, and C is complete, then we should not see a break higher than this 1905 level. Now, there is a small point here I like to mention. It could be that this is A, this is B, and this one is going to become a ending diagonal, right? So in that case, that's the reason why I did not mention the 1905 level as a level where you can consider the longs as possible. So although it may look like, oh, this is an impulse complete, but it can always turn out to become a diagonal structure, right? Excuse me. So because it can always turn out to become a diagonal structure, we cannot take this last high as a clear sign of strength, right? You can in the sense make some intraday longs if you see the movement about 1905, because even in the case of ending diagonal, you will have the wave 3 over here, right? Wave 4 will go down, but there will be another wave 5 which will at least touch the high of wave 3. So in that sense, you can add some longs above the 1905 level on intraday or short term basis, and then continue adding more longs on wave 4, and then wait to get out near the wave 5 high. But that's something only you should do if you are an expert and you know what you are doing. These kind of movements are exceptionally fast sometimes, and even though you might be technically correct and everything would go out as I pointed with the arrows, but you still won't end up with any money in your account because the market had gone so fast down that you even couldn't get out. And it happens quite often. So two things to keep in mind. First of all, this wave C might be continuing as a diagonal structure, might be complete already over here. If complete, then can go down straight off. If continuing, then can form a diagonal and then go down. And last view was straight up. And as I mentioned, important levels 1951. And on the downside, there is no exact level to be precise, but on the downside, I will like to put an alert somewhere in this range of 1836 to 1818, so that if it goes below it, then I can start forming some bearish views or start thinking in terms of bearish possibilities in this market. So that's all for gold. But one thing here is it does look a little bit like it might go on the upside. That's my bias. That's why you see this H1 red. That is my primary view is upside. So personally, I can say that I have a little bit bias towards the upside. So that's about it for gold. All important levels and possible patterns I have mentioned already. If you guys are having any doubts on what we have discussed so far, you can post it in the comment section now or just type in clear, and we will move ahead with the next chart of S&P 500. So yes, Nick, that could be the case, but since we don't really care in that case, as the entire movement would be upside, so I just left it out. Okay, guys, thank you. I believe everyone is clear here. So let's now have a look at S&P. So let's just first quickly check what was the view in the last one. S&P is at 21, right? 21. Over here it is. Okay, got it. So in the last webinar, the view was that either the wave X is complete here or continuing here. And if it's complete, then we are seeing the wave Z up. If it's continuing, then it will go sideways and then up. So these were the two views. And within sideways, we mean sideways in the range of this box, whatever that level is. I think there was a little bit unclarity here, is what I think. And I also recall that my bias was that even if it goes down, there should be one more leg up here. I don't seem to have a clear point. Yeah, this is the one. This is the one that even if it goes lower here, there will be one leg here. And let me see if there's another things I have pointed out from that point. Yeah, so H2 was sideways, up, and then down, and H1 was down, and then up, and then down. So these were the two views. As I said, sideways within this box range, that is price action within this boxed range, and then up, or sort of a little bit lower and then straight up. So more or less a new high was expected. So let's check if there was a new high and what was what. Before that, let's mark quickly 22nd, 20th November. So from this point on 20th November, it hasn't really gone that much up. And let's move on with the price action right now. So I have some new views to discuss here, but before that, let me just quickly check out the last price action here and tell you what I see. So from this point, disregarding everything before, I mean, not discussing everything before in detail, from this point, I can say that we have three legs down, A, B, and C. And then I can see that we have A, B, and probably a diagonal here, right? Like this is a kind of a good setup for a fall. And I will have to say this diagonal is a little bit too, I would say, too sideways. It can very easily be counted as a correction and then up leg, but it fits in with the view that this is a corrective structure continuing, three down, three up, and then there will be five down. So I will have to consider this as one of the main counts here, like an A down, a B up, and a C down, right? So this for now will be our main view, that this is most likely a diagonal, right? This part. And if this is a diagonal, then you won't really be going short right away. Although generally what happens is the movements can be very fast after diagonals. So if you have the capital and you can take bigger risks, then generally it is advisable to go in on spotting a possible diagonal with at least one fourth or one third of the capital, and then add on more later on as the pattern becomes clear. But right now the pattern is not really confirmed. So what we can do is we can wait for a low lower than this level of whatever this low is, 36, or let's just say 36.20. So basically within this range, 36 to 36.20, you can say that we have a legitimate reason for possible shorts, right? So I should at least mark this out 1 second. So below this level, I will be actually interested in seeing some shorts in this market, and could go down as 3 if it's x continuing as a triangle, could go down as 5. Nevertheless, it should go down if this count is anywhere correct at all. So that's the shorter term view, right? Expecting some bearishness. And we don't have to take any action unless we see a movement below 36 to 36.20 level. That is a strong close within that range is what we are expecting. Also use these trend lines, upper trend line and lower trend line, for guiding your trades. Secondly, if it does not go below, instead if it goes higher, like higher than this level of 37.85, then we will have to consider the possibility that this is impulse in the upward direction. That is to say that this was some sort of A or 1, and this was the 2 or B or 2 already complete, and this is 1, 2, and 2 over here or over here, whatever. I haven't really checked, but the whole point is that if it goes straight up, then that's the 300 progression. So that will be your level to watch out on the upside, 3783. However, keep in mind that once it actually goes, if it actually goes higher than 3783, then we will have to again reanalyze the market. Right now, there are a bit more possibilities that can arise at that point. It could be that this whole thing itself might be some sort of diagonal still continuing up. So for the long side, we will have to reanalyze it. For the shorter side, for a shorter time frame, shorting is a little bit more of clear here. As I mentioned, 3736 to 36362 3620 levels. Below that, we will be expecting some sort of bearishness, and above this 3785, we will reanalyze for possible longs. So for short term, that was that. Let's have a quick look at what the new hypo that I have, which is the red hypo here, H2. So I have just gone ahead and thought of what if this was the 1, 2, 3, 4, and 5 here. If that is the case, then this can be considered the whole progression as A or 1, or yeah, let's just keep it as A or 1 for now. And then you can say that this is the B or 2, either continuing or complete. Complete might be over here, and continuing, then it can be doing many number of patterns, could be complex or whatever. So this is different in the sense previously we were considering the whole upside movement as a complex WXY formation. This one sort of gives us a clearer perspective on what this market might be doing. So still not much different than the WXY thing, but I think it's better to keep things a little bit simpler. So in that sense, on the longer time frame, I'll just like to suggest the important thing over here is that this BR2, I believe, might be continuing, is my main bias. So I don't think it is complete over here. If it might be continuing, then I believe it can go down either in 3 or in 5. And that again gives a little bit more weightage to my view that this might be a diagonal, right? So this is all a bit of a speculation at this point. And as I said, we still need to wait for this mentioned levels. So that's all for an S&P. H1 is wait for short-term bearishness. H2 is uh, if it goes above what was this level 3785, reanalyze possible longs. So that will be our hypothesis on S&P. Let me know if you guys have any queries in this chart. Otherwise, we can move on to the next one. If you are clear, then also just post clear in the comment section. Okay, I think all of you guys are on the same page here. Let's look at Nifty 50, final chart in our main sequence. So Nifty 50, let's just quickly check what was discussed in the last webinar for this, which was at 32, 38 something. Yeah, so there were two views. Let me just quickly let the video go to that point. Yeah. So main views were that either X is complete here and this is Z complete. If Z is complete, then straight down can be seen. Second view was that X is not complete over here, but is continuing and completed over here, which will be this point. And if X is complete over here, then after X comes Z, and Z is a three-wave progression A, B, C. So this will be A sideways for B and up for C. And this is what I believe is forming out right now, although we will check it on the live chart. But A up, B down, and C up is the view we are in favor of right now. And let's just quickly see if there was any short-term view here. Short term, I'm seeing a wave 4 pointed out here. Okay. Yeah, I recall now. Short term, the view was I was hoping that we should see some more correction. But if there was more correction, then we will be very interested in going longs for this wave 5 because we will be having a very low risk. And if there is no correction, then a high above 13, that's not 13 or 12,980 or whatever that is, high above that level was long trigger. As you can see, this dotted red line was the trigger. So in Nifty, the view was wait for more correction to go long, conservative view. Second view was, or hyper 2 was, to go long above this dotted alert line, 30 12 9 90, or somewhere near that level. So now that we have seen the view as discussed in the last webinar, let's check what actual price action is. I think 1 hour should be fine. And let's first mark out the date. Alt V, and we have 22nd. No, that's 23rd. So yeah, 20th November was price action was over here. And what happened is the second review played out. It did not really go to. By the way, this is what was marked as 3 at that point in time, and I was hoping that we would see some more correction and then up. And it did not do that. Instead, it just went above this 12,990 level straight off, right? So short term longs were here. After that, as you can see, I had to redo the counts because it continued in its rally a little bit too far. So for now, we can say the analysis discussed in the last webinar did play out as expected. Moving further with this new updated count, we now have to consider the fact that this is the X, right? So yeah, this is the X. And in that sense, we will consider this as the A of the Z, B of the Z, and this should be the C of the Z. So this is our first view, which is in an alignment with what we have been discussing for many months now for this market, that this market is in a corrective up move, corrective up move. So if this is the count, then it should be considered in the last stages of its corrective move, because wave C will be the last impulsive. And if that is the case, then this could be 1, this could be 2, 3, 4, 5. So you get the idea, right? This should be the last leg up if this is the C of the Z. Now, again, this is just one possibility. Let's move ahead with another possibility. A is here and B is continuing sideways and then C up. Now, given the fact that this leg up looks very, very bullish, I have to hesitantly say that this might be the end of B. Generally, wave Bs are not that fast looking, but this leg after it is quite fast. So I will have to go with what I see here. Anyways, we are not rigid with that. And but the main thing to note over here is we are expecting either be complete here or continuing. In either case, positionally, we are expecting long, straight long or sideways then long. And that would be our short term view. That is what to do on the coming sessions, like 3, 4 sessions or something like that. Let's quickly check on the bigger perspective, where I have added a new count here in alignment with the bullish count of the S&P. This is the green count here that I have added to match with my view of the S&P's bullish count. So this is suggesting 1 up, 2 down, 3 up, 4 down, and fifth up. And this fifth is in the final stages. That is, this is the 1 of the 5, 2 of the 5, 3 of the 5, 4 of the 5, and fifth of the 5. So it really doesn't change much here, because again it is having one leg up remaining. Now I could have gone ahead and made this the 3. Let me just remove the counts. So I could have gone ahead and made this the 3 here, some sort of 4 here, 5 here for an A. Taking the B over here would make it a 1, 2, and this will be your 3, 4. Okay, yeah, so this count is valid. 1, 2, 3, 4, and 5. So this is again a valid count, and this one fits actually better with the view we discussed in the S&P. If you guys recall, the last view we discussed was this is S&P, and we discussed that this might be the A, might be the B, continuing complete, whatever, and then C up. So it does fit in with the view with S&P here. So we will have to consider this possibility as well. And for those of us who are exceptionally bullish on this market, and at this point we have to consider the possibilities, although for that much time, From this low, we have been of the view that this is a corrective rally, but we have to analyze every possibility. So then we can simply say that this is the one up, two down, and this is one, two, three, four, five, four, three, four, and five. So just this is just to keep in mind on the larger time frame. Doesn't really matter at this point in time, because at this point in time, the things that we discussed, which are more important, I think we should point out on the 15-minute chart. Yeah. So at this point in time, the most important thing was this last leg up, which I believe is going impulsively, and that's why I thought that wave B might have completed here, which is a bit odd. But we seem to have a one up, two down, and three up is in continuation. I have checked it quite intensively, as you can see with the internal counts of the structure. So from a shorter term perspective, that is on the coming session, if it goes and gives a correction like this, then I will be quite interested in going long for this leg up. So that's our view on Nifty for positional view, long term and extremely short term, as you can see on this 15-minute chart. And a quick summary would be that we are again expecting one more up leg, but my view is that on very short term view is that small corrective movement and then up. This is only for intraday valid, let's just say 1 or 2 sessions. And a little bit higher time frame view is that wave C is still continuing. So one more leg up is remaining here. But keeping in mind that this B, if it's continuing, then it will be sideways, then bullish instead of straight out bullish. So overall, positionally, we will be looking for longs. Short term, also we will be looking for small pullback and then longs. But on a bigger time frame, if it does decide to go sideways, then it can take a little bit more time. I guess I have gone on for way too long on Nifty. If you guys have any queries on this chart, just let me know, or we can have a look possibly at some stock. Okay, seems like everyone is clear. A few more confirmations from other participants would be better. Sandeep, Gavaskar, Emil, Aman. Thank you, Raman. So let's just move on and have a quick look at two stocks here. So Axis Bank, been following it for a long time now. I think we had. I will just look at it from a shorter term perspective instead of going all detailed. So from a shorter term perspective, I think the first leg down, W up X and Y is complete. And if that is the case, then new leg, which should go higher than the last high of what is this 640, should be forming. So basically, January series, we will be expecting upside in Axis Bank. Obviously, no need to point out here. Technical stop loss is below wave Y low 570, and I really don't see any other strong hypothesis, right? So that's why I chose to discuss this chart in this session or webinar today. So I will be tracking this one closely, and really the important hypo or the main hypo here is just expecting more upside. So yep, that's it for Axis Bank. Expecting more upside, considering the fact that this correction may have completed. If we are wrong, then we are only wrong below this level of 568. Let's just say 570 for convenience sake. And strategically, you can just go positional long and keep stops as 570. Although from a risk to reward perspective, you can see it is about 1:1 kind of situation here. So that's it for Axis Bank. Let's have a quick look on Amazon. Yeah, Amazon is a bit interesting here. Is advisable for everyone to keep this one in your track list. Looks like clear three down as an A, B up, C down, again A, B up, B down, C up, and then again A, B, C. So I am thinking that it's a very clear triangle sort of situation. So first leg of the yeah. Before we move ahead with that, triangle is a structure which has 5 waves inside of it, and each of these 5 waves is a 3-wave structure. So This is what you can say roughly is what a triangle would look like. And you will call this your A, you will call this your B, your C, your D, and E. Once the E is complete, then we should see a strong up, just an up leg, not necessarily strong. So in this case, at least the C is complete, is what I suppose. Might be continuing in the D, and once the D is complete, correction to the downside for E, and then straight up movement. I have done some internal analysis. So, and I think if this is the D, then this is, by the way, this leg structure is very clear, as you can see. One up over here, two down, three, four, and five, and so many gaps. That is definitely an impulse. So that's why I'm saying that because of the clarity in this chart, this should be followed. So yeah, A up, five waves impulse, correction. I think the correction may have completed as the triangle over here, right? Over here. And if the correction is complete as a triangle, then this could be your one, two, three, four, five. So as you can see, even on the shorter time frame, we may see a bullish movement straight in this market, right? Although you have to consider the fact that this B is not really, actually, I should put a question mark here. This B can have some other sort of propagation and become more complex here. So don't take this count right away, like precisely as it is. Consider the fact that there might be some complex formations for wave B. But from a shorter time frame as well as a positional perspective, I think Amazon is long. And when will we be considering our analysis wrong? If we go below wave C low, right? Without going higher as just pointed out. If we did not go higher as pointed out and straight off the market sees a low below 2960 something, 2957, 2960 levels. If it straight out goes below that, then this analysis is completely incorrect. And then we will have to reevaluate this market. But as long as it is holding this level of, or not level, let's just say this zone, right? As long as it is in this zone, we will maintain our bullish bias here, right? That's about it for Amazon. Definitely keep this one in your track list. And even if this count is wrong, then you can have a very good shorting opportunity here, because if a very clear count in the y direction is not followed, then that gives rise to the fact that it might be a formation in the downward direction, right? That is to say that if a bias signal, very clear bias signal fails, then generally it's a very good sell signal. That's generally the way traders like to interpret a clear buy signal failure. That's about it for Amazon. I reckon we have discussed all we came to discuss, and we are almost at our allotted time. Do give me a clarification if you guys are clear with not just this, but all the charts that were discussed here. All right, I reckon most of the people are clear on what we have discussed. And once again, before we leave, important things, do share this webinar once it is recorded, uploaded on YouTube. It is very important. You may not think of it as an important, but unless I see a good following, there is not much point of me coming in here and talking about it. It takes many hours of analysis to compile this, do analysis of a single chart for 4 to 5 hours as well. So a lot of hours go into it, and unless I see a good following, there is not much point. So share it, like email it, WhatsApp it, or Telegram or Twitter, whatever you use. Share it. Consider sharing it with at least 5 to 10 people in your group, and that way, even if 50-60% people or 50-60 people watch it till the end, at least they would have shared it with the 300 or so people. That is all I'm requesting here. You may consider my services or not, that's a different matter, but sharing is important here. Without that, business cannot run. And those who are interested in learning from me, because I frankly have not seen anyone in the whole business of trading, that anyone is a trader and as well as good at teaching with this level of accuracy. I will like to point out again the track record that I have been keeping of my analysis from 2016 onwards. 2016, 2017, as you can see, have been around 85% so far. And for 2020, as I just pointed out, although 2020 is not complete, we are at 89%, so 90. So this is exceptional. You can check at your end. I'm not just blabbing things for marketing purpose. I frankly have not seen it. Even when I was starting to learn of Elite Wave in the beginning, I searched a lot and I could not find anyone with the credible track record. And now this is 5 years of stuff. This is not just 1 or 2 or 3 months, and this is public. I come in live in front of you people and I talk what I think. So there is no room for nonsense here. So if you are interested, here's your chance. My personal classes, I have decided to at least once give a try with 20% off. You guys won't be getting any better deals here. And those of you who cannot afford or are not planning to engage in serious studies, but just like to get an overview of Elite Wave, as I mentioned, the video course has been given a 50% discount for a very limited period. And the link for that is this 50hours.com/PWD. And 50% discount you can avail here for this limited time. And once again, if you guys are already students in the video course, then I will suggest you forward this discount thing to your friends or colleagues who you think would benefit from it, obviously. And also, I would request, other than sharing the webinar, you kindly share my track record as well. And lastly, those interested in the training can make the inquiries here, 50eyes.com/training dash program dash LT. I will post the links as always in the description. And been nice talking to you guys. I reckon this is it for now. And make sure to join in the next one and have some interesting discussions here.